My lucrative stock market investment with little capital. I decided I wanted to play around in the stock market. I was completely new to stocks, still am learning. Many say you need 10k minimum to invest in stocks. This is not true. You can register with discount brokers, $3.99 trades, free trades, etc. So to start off, I have always had much interest in investing but zero experience with stocks. I wanted to experiment with a relatively small amount of money. After a profitable concert I invested in paid off very well for me. Rather than putting all the money in my regular accounts or spending it, I created a Fidelity account. Now have switched due to lower fees and put $1,000 in. Knowing that I only had $1,000 and Fidelity charges a $7.99 fee every trade, and also knowing that most stocks go up slowly, I came up with a rather different way of investing. I invested in stocks immediately after very bad news was released and the price drastically dropped, or biotech stocks that had new drug results waiting to be released. For example, Tempur-Pedic dropped to less than 20% of its week before price. I bought a few $100s worth of its shares. I sold these shares later at 35% above my purchase price. I invested in Zolt after it crashed and sold the shares at a 40% profit. I then rebought Zolt when it went back down to $8. Now it is at a 14% loss, but even with this loss my gains from the prior sale of Zolt still make up for it. I predict Zolt will come back to life and raise to roughly $9.50 in the near future, in which time I will sell again at a profit. I then invested in PPHM at 0.86 and sold at 1.39. I made some decent money on this one. I see the potential in many biotech stocks to be very lucrative. My new investment is in ONCS, which I bought at 0.282 and is now at 0.292. This company has zero profits, so many may be hesitant to invest. I invested in it due to a prediction that when its next drug goes to trial and shows success, the stock price will jump drastically and I will make out at a very lucrative profit. Many may say this tactic is risky. I disagree due to spreading out the investment and looking at risk to reward on a multiple stock scale as a safety net, for if one goes bad the other lucrative gains will back you up. One guideline I use is I look at the company's assets, and if they have enough cash to debt that I believe they will not go bankrupt, I see the potential for lucrative profit and I invest. Right now my portfolio has increased at over 30% in less than a year. If I had put 100k in, I would have made 30k profit in less than a year. Not bad. Good luck. I have used the same strategy, sorta, 300% ROI and 50% in 1 year. I do however check financial background information on a company, and never invest if they haven't made a profit last 3 years. Also trying to find companies with low debt. You should check out Oslo Stock Exchange if you can access it. It's pretty volatile. Now ONCS is 7% above my purchase price. Yay, I'm open to any advice. Also, if any of you know any good articles on trading volatile stocks, feel free to post them. Just sold ONCS at 22% above purchase price. Lol, I am starting to think I am just getting lucky. Just curious. How do you monitor the bad news and whether or not the price drops? I certainly believe in your core model. Wait for good companies to suffer from emotional selling and swoop in for the bargain. It's the reason why I don't subscribe to rational market theory. I check the biggest stock losers list of week, and if it looks like the downfall is over, I invest. To find the news, simply type in the symbol on Yahoo Finance and at the bottom of page is any news stories or tips, etc. LOL, people say this all the time. If you had $100,000 you would not have made the same trades. People say it's risky because it is. Unfortunately, most people have to learn this themselves with their own money. BTW. This is also on my list of things I don't talk to others about because it's a no-win argument: religion, politics and stock trading. If you have 5 stocks, you win big on 3 of them. Lose on one and one does nothing. You still come out well ahead. Don't put all your eggs in one nest is the way I see it. Calculated safety nets. Also stop-loss settings. At this fast rate of growth, my account will have a decent amount of money relatively quickly. I will not put any more of my personal assets at risk, but I have no problem reinvesting the profits, which is what I have been doing. As my account grows, the profits of each transaction will grow also, and the more diverse I can be also, which is my safety net as well as the stop-loss setting. Also, I find it fun. I like watching my stocks on my phone. Sitting bored at work and realizing I just made way more in a click than I would the entire day at work. Plus I see it as a great learning experience. Interesting. Why not stock trading? The premise of your system is sound: buying emotional overreaction. Beware though, buying a bunch of similar stocks is not diversification. Another risk for you, which can be controlled, is overall market risk. So be careful if you are buying the biggest losers, and the entire market is tanking. Learn position sizing. This is the most important way that pros control risk. The other thing to be aware of when it comes to risk is that most people get done in by risks that they don't expect, not the ones they plan for, so you'll need to be constantly expanding your knowledge of money and markets and trading to be able to learn to predict the unseen risks. When a trader is making statements like this, he close to peril. There is no such thing as expected profits, and thinking you've got it figured out is by far the biggest risk in trading. Overall though, a great start. Keep trading small and safe. Keep detailed records of all your trades and your inner dialogue, and review often for ways to learn. Because the conversation is the same and you can't convince the other person otherwise. Try listening to a buy and hold guy talk to a day trader. They each believe in their methods and will argue them to their death. Generally true. However, if an individual believes and understands that there are a million ways to make $1 million, then it's all about learning. That's how I approach it anyway. I'm not a trader, but I don't begrudge them. Nobody understands all ways to make money. Why not learn from others who have done it differently? It can only make a person better, smarter, faster. The fact that you made this extra post to me means that you will fail at this. Because it's fun. It's a learning experience. Bored at work? These are statements to protect your feelings in case you lose money. They make you feel better about what you are doing. You are investing your hard-earned money. It's not something you take lightly. You probably do take it lightly because it's only $1,000. I'm not saying not do it. We've all been there. We've all traded stocks, made and lost money. Anyone can throw $1,000 at a stock for fun. It's like a lottery ticket. No stress in looking at your portfolio go up and down, but don't start thinking that you could have turned $100,000 to $130,000 in a few months. If you treat $100,000 as a fun learning experience, you won't have it long. Step back and learn more first. I have to agree with Bioface. When I invest, it's not for fun. When I want fun, I take a trip with my wife and daughter. There's no fun involved. It's all cold, calculating, and methodical. What I mean is that if you and I both have the same stock, we may both have different exit points based on different methodologies. I'm sure we can discuss the merits of both of them rationally. However, if you meet some friend of a friend who has the same stock, who trades on his free time, I will bet that you and him will not have a good conversation about when to sell. Because most of the time it's emotion or feel-based with people, same as politics or religion. I usually just zone out to the point now where I don't even broach the subject. Of course I would not put $100K in inexperienced. No, they are not feeling to protect if I lose money, although I do understand the risks. Yes, I said it is fun because it is fun. Just my philosophy on life and how I spend my time. If you are not making significant amounts of money off something which with my portfolio size I am currently not, you better be having fun at it, and if you can have fun while making significant amounts of money, even better. BTW Chicago 457, we are not trying to bring you down. Just telling you to watch out and slow down so you don't lose the money that you have. Yeah, I can see this happening. I tell my close friends when I'm buying. They understand that I don't have an exit point. However, they also understand that I can pick out a bargain here and there, so they buy alongside me. The only difference is that they usually sell out within the year just to bag a few $1,000s. We have a good laugh about this when we get together. I rib them about settling for a pittance. No offense taken. It really sounds like you haven't done your homework and are just looking for a quick dollar. I day traded full-time for over a year. Yes, I made lots and lots of cash. Yes, I quit when I had the most knowledge to make profitable trades. Why? Dude. Risking $80,000 multiple times a day is freaking stressful. When playing with a 4-to-1 risk reward and taking some big four-figured losses, it's just very emotionally trying. During this time, I learned programming to automate my trades and ended up selling some trading software for more money than I could ever make per hour trading. As weird as it sounds. You have to be tough to be an entrepreneur, but you have to have balls of steel to stick around in the trading world. Since you've said you're open to advice, there is one surefire securities investment tip that will never fail you. You said your little story about the penny stocks and a theory on how it works, and everyone and their brother will have one similar, but all of them are bullshit. Why is that in a currency market you can throw up a Fibonacci series on a chart and every single line will get perfectly tested? Why is that fat support on the bid side will always be followed by an increase in price? Why is there fat support on the bidder side? Why is it that right after bad news a stock drops in price? The reason is simple. Price changes occur when people have a reason to buy or sell. If you have one strategy, charts, news, fundamentals, and their associated time frames, then you're only getting a fraction of the reason why someone would buy or sell in a scenario. I spent 60+ hours a week researching my trades and making sure everything lined up. My charts, news days, a company's financials, because I wanted all reasons to be in the direction I was favoring. But the CCI on the 20-minute dropped below -100, it should have been oversold. Yeah, but you failed to realize the CCI month was still over +100 and coming down, and they just released their quarterly earnings showing a loss. Also, a second tip. Decide whether you are a bull or a bear and never make yourself a pig. Bulls think the price will go up and buy and sell. Bears think the price will tank and short and cover. I was a bear who looked for all the reasons to sell to line up, not just one. The reason for being a bear to me was simple. It's much easier for people to say give me my money back, than to give up their money. Netflix is a great example of this at work. It took nearly 3 years for it to go up in price from $5 to $300. Yet over the course of just several days it dropped 90% in price over news that nearly 12% of its customers had dropped them while they charged the remaining 88% double. Anyone that can do the math will tell you who cares about the 12%, they're now operating at 176%. But sure enough, news of lost customers is news of lost customers, and the panic selling dug in, triggering a ton of stop losses. So, choose a side. Most brokerages won't let you short pennies, but once you get that $25,000 and become a pattern day trader with 4-to-1 margin, you may want to re-strategize. This is the worst advice I have ever heard. You should be removing as much emotion from your purchases as possible. Emotional trading should be saved for the casinos. Edit, I have faith Chicago. You can definitely do it and succeed. It's a hard learning process with a few successes. But who cares? Everything is like that, ha ha ha. I personally chose the business route instead, but that didn't deter me from starting in the stock world, and that didn't deter my trading friends from continuing to trade either. As long as you do your DD on a trade and are playing with positive risk or rewards, you'll be set. You missed the point. I wasn't giving advice. I was saying that his system is based on the emotional trading of others. Taking advantage of this type of trading in others is what I meant that he had as a sound system. Just like a casino takes advantage of the emotional nature of gamblers. Oh my bad, I thought you meant to trade on personal feelings and emotions. True. Buy and hold versus day trading aren't even close to the same thing. A day trader has more in common with a poker player than he does with an investor. Thing is, poker players can make a lot of money. So can investors. I do see your point, however. It's like, one guy is arguing that he will make more money and the other guy is arguing that he will make more money. It's a pointless argument. Unless you're really getting in on an IPO. You're not an investor. You're a glorified baseball card trader. Warren Buffett is an investor, the sharks on Shark Tank are investors. Your dad's stock account through E-Trade is not investing, ha. I used to trade for many years, but primarily futures, and also made a lot of money daily since it was day trading. But you need to keep in mind that no one trades would have, could have and should have. After a trade I notice that a lot of newly traders think that they should have or could have done it differently to make more money. But the key is to take out your emotions from the trades and never think like that, because you can never know 100% unless you're insider trading. As a trader you need to have a strategy on when to get in and when to get out. I always saw that I could have made a couple more $100 on a contract, but I always followed my strategy. So if it hit my profit target it sold, and if it hit my stop loss it sold automatically. Off topic, but I know almost nothing about stocks other than a simulation in my 10th grade economics class. Can anyone point me to some recommended resources to help me start learning? Too broad a question. Read all books, stocks, and pick one that resonates with you. The Market Wizards series has some gems and some duds. It's been said here and you need to look at it before every trade. Learn position sizing. You have to learn to make little wins before going to bigger ones, otherwise you are gambling and will lose your ass. Stay away from penny stocks unless you know something others don't. I was heavy in that game. Front-loading is what the name of it is. If you aren't front-loaded you are a scalper. If you are a scalper you better be happy with your 10 to 20% flip and walk away. People are full of shit, and no one can tell the future. I saw a guy who could read the market astonishingly well lose his ass on a bad call on another company. We are one trade away from humility, hence manage your risk. Will be hard to do since at your level putting 5 to 10% of the portfolio is negligible. You are getting eaten by fees, and when your account gets bigger you'll be putting even less on each bet if you are disciplined. Don't mess with gamblers like Billy Walters though. You can make millions of dollars a million different ways. You really can. Day trading really isn't investing, is it? It's an arbitrage game, playing on probabilities. Care to speak more on your experiences with day trading? I'm interested to hear about them. Just because you can't tell the future doesn't mean you can't predict it with odds in your favor. Also, new traders can escape this by going directly into currency trading for pips. As long as they don't sign up at a bucket shop like you, it's not investing at all, ha. Neither is the majority of common stock trading. I really did love it and was interested in moving up in the world with it, but the stress was just too much to handle. And here I'll share more. I was actually your age when I was doing it full time. I had a split portfolio between short-term swing trades and a day trading account where I would spot out my trades the night before. A typical night would be scanning the stock charts for certain indicator plays as well as rumors and schedules for expected news for what to watch. I then wake up at around 5:30 a.m., turn on MSNBC, and set up my trading windows for the day. I have a 3-monitor computer set up right now, which is great for productivity for software development, but back then I was using a 6-monitor setup so I could see everything at a glance. One of the trades I made was buying Apple in January of 2010 in the 120s, and sold it several months later in the 190s, I believe. As we know now, it went on to go over $500 a share. But I was convinced that there would be consumer revolt over the iPhone 4 and the first-generation iPad. The iPhone 4 promised 4 grams to people who pre-bought in September of 2009, but released news 2 weeks before its release that it would only have 3 grams. The news almost made me sell, but the dip wasn't that bad and there was still big hype for the release of the iPad. When the iPad was finally released, it lacked features the prototypes had, which showed a clear rollback of the device to purposely pump a second generation. They were screwing over their customers. Also, they had described the iPad as a touch-screen MacBook, not an application running device or an enlarged version of the iTouch. It wasn't even revolutionary. After I sold, I was waiting for consumers to catch up to what Apple had pulled on them, but they noticed. That was one of the big business lessons I learned in life so far. Swing trading was my most lucrative trading set. It consists of buying, selling, shorting, covering, and repeating on a stock that's oscillating in price. The bulk shipping industry had some stocks like England Dries around the time that seemed to be on a perfect month-and-a-half cycle, being controlled by a large NY hedge fund which showed 30 to 80% 1.5 monthly swings. There was a lot going on with it, so if anyone has any super specific questions with it, like brokerages, or theory or anything, drop me a PM or ask in a thread. Interesting stuff. I'll have more questions for you soon. Speed plus also, I have a little bit of capital but I'm not willing to throw it all away just to learn how to day trade. Should I start low $2,000 or so, or go all in a bit more than $2,000? Thanks for the speed. If it's $2,000 you can afford to play around with, go for it. I'd go right into currencies though. A good forex broker in the US is MB Trading, who I traded through for a bit. A $1,000 account is plenty to start in trading forex on margin for pips. $0.0001 moves. It's open 24 hours a day, 1 or 2 days a week, which makes things much smoother. The transitions between which continent is currently trading is pretty apparent, but it's nothing like the open and closed scam on the NYSE and Nasdaq. Another thing that's cool is theoretically all currencies should be in equilibrium with each other. In theory. This means you don't really need to diversify. If you understand the players in the market, you can pretty easily understand the big moves. There's also billions of dollars of liquidity being pumped through every minute, which you'll see on your L2s. If you trade pennies, or even mid-cap stocks, staged sellouts are sometimes required to not wipe out the bid support or overstack the ask. You can pretty much rest assured that your market orders will execute immediately. One last thing. It's a flat fee per pip traded. This makes trading $1,000 versus trading $100,000 no different in terms of entry-exit percent. Obviously that becomes unfavorable when trading very large amounts, but it's a sweet deal for people just getting in. Look up bucket shops though and what they are if going to do forex. I know the reason I chose MB was that they were an ECN electronic communications network who actually performed the trades, unlike bucket shops. The reason for not being able to permanently transfer currencies was simple. They didn't want to deal with the physical transactions of multiple currencies being traded and therefore required an exit for every entry back to the original currency. Oh, also, you can sign up, download a trading platform, and trade on a fake currency or stock account for free through MB. It would be a great way to practice without gambling away your money. Just bought CHTP at 1.09. It is going up about 0.1 every 5 minutes. Watch closely. If anyone is looking to day trade and make a little money right now, I recommend this. Put a stop loss order in though, just in case. I'm currently playing stocks through Market Watch. Bought some Apple, waiting for it to go to 560. Selling if it hits below 549. Playing with small percentages in the simulation. This seems to be a game of self-control. Losers play off emotions, winners play with numbers and stick to them for dear life. Or so I think. How did this one go? Did you sell? Yay, I sold onks and made like $60 lol, lost on 2 day trades after that but put a stop loss, so just like $15 and $22 loss, not bad. Also bought a random stock today with a stop loss and plan to sell at end of day regardless or if it hit certain dollar, and I made $50. Then bought over $1,000 worth of Groupon today as I saw it on a steady uprise. Checked largest growth list to find it, set stop loss 10 below purchase price and then stop loss +5 every 10 minutes as stop price raised until my stop loss went off automatically at over 10% profit. Did pretty good on this one. I got Fidelity to give me some free trades cause I said I would switch otherwise. I predict I will have 25k in my account after not all that long if I keep my strategy up. It does take time day trading though, monitoring, and can be a headache at times. P.S typed on my iPhone. I can tell you from experience that more than likely you will trade differently when you get to 25k than you do at 1k. I took 2,300 into 50k plus in about 6 years, so your goals are not unrealistic. But my trading changed dramatically when I got up that high. Is one thing to piss away 2,300. I can make that back pretty quickly. 50k plus, I think it was 58k if I remember correctly, was about 1.5 times my annual salary at that time, so losing it had much more emotional impact on me. But maybe you will be different. Carrot, I agree. I already have changed my risk acceptance around from when I only had 1k in the account. Still, when I break things down mathematically in my head to risk reward or plus or, I am not hesitant to take educated gambles, or should I say calculated risks. I don't know which word fits best, as it truly is somewhat true of both, which adds to the excitement in a way. I found writing down numbers or goals helps me make quick decisions and, more importantly, stay by those mathematical decisions rather than act on emotion. Just an update. I am still doing good in the green. Seems my strategy is working. I am starting to take on longer, lower risk positions also, such as NWS. A mistake. I put my stop loss to close the purchase price. For example, today I got screwed on NWS. I put my stop loss at 25.41 and it dipped to 25.34 for a second and then back up to 25.80 and sold my shares at 1.41. I will now rather look at the average volatility and still use a stop loss, but take a more educated guess of where it should be placed. I predict ONCS is going to go up 30% or more in the next bit. They have funding to last through 2013 and all of their products have shows positive results. This one may go down a little at times, but I believe if I hold on to it, this stock has the potential for great profits. It was at 12 one day and 41 the next. Risk does come with it, but I am a fan of this one and have read lots of positive info about the company. If another company was confident enough to buy 7.5 million shares, to me that is great. My target is to increase my money by at least 50% on this one. It could be months, but the second that the FDA approves or great news released, I see this volatile stock skyrocketing. Isn't this called speculation? Sorry, don't know a whole lot about the stock market, but my old man lost thousands doing this back in the 90s anyway. Congrats that you're making some dollar and good luck. This can be common when trading fairly volatile positions. I typically pick stop-loss figures using some multiple of their. If I'm looking to trade something simple like the SPY, I might set the stop at 2 times the ART14. If I'm trading a 3x levered position, I might do 2.5x ART14, but I'll also balance this against a max dollar amount or percent I'm willing to risk. By the way, the link above is a great source for technical indicators and gives you the actual formulas to calculate them if you're into building spreadsheets. The bigger concern than getting stopped out early is getting your order filled way below your stop. Since you're trading sub-$5 biotechs, you are certainly exposed to this risk. If news happens overnight or over the weekend, you may wake up to a huge gap down and your stop will be filled at the market open, substantially below where you thought was your guaranteed out.